All right, so yep, we should be live right now, and it is 11:59, and I'd scheduled this to go live at noon. So I think we have some people on board here, ready to go, and we'll go ahead and get started. So it is 12 o'clock. This is YouTube Live, and today we are talking about raising private capital, raising private money in the coronavirus. It is during the coronavirus pandemic, and it is April 15th of 2020, and our world has definitely changed. The world of lending has definitely changed. I see that Sue is with us, and we just finished a mastermind call on some of these topics, the real estate environment that's going on. So we will go ahead and jump right into it. This will be recorded so you can watch it later as well. It'll be on my YouTube channel, and I am recording a podcast as well right now while we're doing this. So we're going to talk about raising private money in this environment. So what does that look like right now? So number one, as always, I'm going to recommend that you definitely check with the laws in your state. So every state's different when it comes to private lending and when it comes to securities laws. So you want to make sure that you check with the state. You also want to make sure that you understand federal regulations. There's a difference between borrowing money and offering a mortgage, a note and deed of trust for one doing something with that, whether it's on one property or multiple properties. So what you want to understand is the difference between the two, and that each state has their own securities rules and laws, their own lending laws that you need to check with. And so you want to talk to your attorney about that, a real estate attorney as well as an SEC attorney. And if you want to pool investors to buy bigger properties or to do a fund or something like that, then that's going to require filing an exemption with the SEC and adhering to SEC regulations. So I'm not going to get into all the details and all the legalities. That's for you to talk to your SEC attorney about, talk to your real estate attorney about, to understand the rules and the laws at the state and federal level and requirements for borrowing money, creating funds, and doing those types of things. What we're going to talk about is how do you even go about the process? What is it that you need to do? What does your business need to look like, and things like that. So once you've talked to your attorneys and you've got all that advice and you're doing things the right way, the legal way, now what does it take to be lendable? What does it take to be somebody who's credible that people are going to want to lend money to? So number one, you need to be an expert. So whatever it is you're doing, if you're flipping houses, if you're buying apartment buildings, doing commercial, doing real estate development, businesses, whatever it is that you're borrowing private money for, you want to make sure that that you know your space, you know your market, you know your business, you know the metrics, you know all of the things that somebody is going to want to ask you once they get to know you about the business, so that you can prove to them that you're an expert, that you are somebody that's credible, that they can lend to. So you want to educate yourself. You want to know the market, know the strategy, know the space that you're investing in. And if you've never done this before and you're new in whatever it is, then maybe you want to look at finding a partner who's experienced. And if you're good and your talents are that you're social and you're good at talking to people and meeting people and networking, you can focus on the capital raise side of things, and you bring a partner on that is an operator that can focus on the operating side. You want to make sure that you're educated, that you're packaged up, you're professional, and you know what you're doing. Then you want to create your brand, right? So you want to make sure that all of your social media across all the platforms, you have to be out there, because people need to know, like, and trust you, right? So when you talk about number one, they need to know who you are. They need to know of you. They need to know about you. And one of the ways that people get to know you, one of the easiest ways for people to get to know you, is to have a brand that's out there across all of the platforms, YouTube like this. And feel free to post your questions in the live chat there. I can answer those as we go along. We've got several people watching now, but you want your brand consistent across all the platforms. You want to be professional and dialed in. You want to make sure that your website is very professional looking and that it conveys what it is that you do very easily. And you want to be focused, right? So you want to be focusing on one niche. So you don't want to be until you're out there and you're experienced and you've got years under your belt, you can invest in multiple asset classes, multiple types of properties, things like that. But initially starting out, you want to be focused on one thing, have one niche, one lane that you're very focused on. And then you want your website to clearly convey how that works, and have an area that educates investors in terms of how you do what you do and how they can participate, because you need to make sure that you're qualifying your investors, right? So certain things require accredited investors, some require sophisticated investors, and then other things like a one-off deal, can be pretty much anybody, but you still want to make sure you educate them on the process of how you do what you do, because as a private lender, when you're borrowing private money, this is your program, this is your deal. You're providing the opportunity for somebody to participate with you and make money and earn a return on their capital. So you're providing a service that's needed by a lot of people out there. So, make sure that you understand that what you're doing is something that's needed. What you're doing is you're providing a service. You're providing opportunities for people to invest, kind of like a bank. Banks make money by lending money, right? So you want to have that package together, good website, all your materials together that talk about what it is that you do. And you want to post, what your business is. So if you're flipping houses, you want to post that in the progress, talk about the deals you're doing, that kind of thing. If you're doing multifamily properties, post and educate on those spaces. If you're doing real estate development, whatever it is, educate people on what it is that you do. And then you want to educate people on the business of private lending, right? So how can somebody be a private lender? You can't solicit for investors, even if it's one-off and you're offering a note and deed of trust, you cannot go out and solicit investors. But you can certainly share what it is you can do. You can talk about what you do. You can talk about how people can become private lenders and what private lending is. So you can always educate. And especially right now during the coronavirus, you can't go out, you can't network, you can't gather, but you can certainly share on social media, and you can, go on to, real estate blogs. You can go on to real estate, groups on Facebook, meetup groups online, LinkedIn groups, and you can post across all those platforms. Do YouTube lives like I'm doing. You can make videos, all that kind of stuff, and just educate people. Talk about what it is you do. Talk about how they can become private lenders. So that's how you kind of get that out there, and you want to develop your program. So if you're offering individual opportunities and you're flipping houses, you want to make sure that you have all of your paperwork together, all of your disclosures, your notes and deed of trusts, because people, number one, the first thing they want to know is, how are you going to protect my investment? So they're more interested in preservation of capital before anything else. So you come first, then it's preservation of capital, then it's the deal itself and how much money they're going to make. So you want to make sure that if you're offering a note and deed of trust and you're doing one-off deals, you've got those examples of that paperwork that you can send them so they can examine the note, deed of trust, the mortgage, and they can understand what that is, and your disclaimers, disclosures, all that kind of stuff. If you're doing a syndication, same thing. You're going to have operating agreement, subscription agreements, PPMs, all that kind of stuff that you're going to have to give to the investors, and all the disclaimers and disclosures there. So you want to make sure that paperwork is done and dialed in so you can send it to people. So we talk about the know, like, and trust thing. So when it comes to knowing you, people need to know you. They need to know of you, know who you are, know what it is that you do, and know that you are credible and that you know your stuff and know what you're doing. So that's what it means, to have people know you. You have to be known. People have to know what you do, what type of deals you're into, that kind of thing, and that you're good at what you do. Then they need to like you, right? So people need to get to know you and like being around you and like your philosophy. Not everybody likes everybody. Not everybody can do deals with everybody. Not everybody is meant to do business together, right? Some people are going to like you, some aren't. You're not going to like some people, and you don't want every investor in your deal, and every investor doesn't want to do business with you. So you want to get out there and put yourself out there in social media. That's one way for people to get to know you a little bit and find out whether you're somebody they want to do business with, and vice versa. So people like to do business with those that they like, right? And then on the trust side, again, preservation around the coronavirus situation. People want to know, how is my investment secured, right? Preservation of capital. How am I secure in this? So you want to start these conversations when you're talking to investors. First and foremost, it's about you. Okay, they're investing in you first and foremost. Then it's about, how is my money secure? So what you want to lead with, and what you want to get out of the way right away, is how can they lose their money, right? Investing is risky. Everybody knows that. So you want to kind of disclose and just tell them, all the things that can go wrong, right? This is an investment. It's real estate. Things can happen, and things can go wrong, whether it's a business, whatever it is that you're raising capital for. You want to make sure they understand all the risks around it. And, your people that are looking to invest, they understand it, get it. They know it's a risk. So you just want to tell them. You never want to come to somebody and say, man, this is a surefire guaranteed. This is the best deal of the century, not going to fail. You never want to lead with that kind of stuff. You never want to, try to convince people that this is the deal of a century, that just nothing can go wrong, right? Because, people know that there's risk to investing, and that there is no guarantee. You can't promise guarantees, but, people know that things can go wrong, will go wrong, and nothing is guaranteed, right? So, make sure that, you're leading with, those types of things when you have that conversation, those follow-ups, right? So preservation of capital. How am I going to, how's your investment going to be secure? How are you not going to lose money? And then you can start talking about the deal itself and the metrics of the deal and the returns and all that. Now, these are going to be over multiple contacts, multiple touches in the conversation, the relationship, depending on what kind of offering you're doing. If it's a syndicated deal, your investors, depending on what type you do, whether it's a Reg B, 506B or C, with the 506C, you can do general solicitation, but you still need to have multiple touches, right? For your qualified investors, your investors, you want to make sure that you have multiple touches, 3 substantive. It's a substantive relationship with the 3-touch rule. So you can look that up on the SEC guidelines and understand what that's about. So, how do you do that? So how do you share your business? Because you don't want to just meet somebody and say, hey, here's my deal. You ready to go? So the way it starts out is you're sharing what you do, and you want to have your one-liner ready to go. So when you're talking to people, you want to have that opening one-liner so that when people ask you what it is that you do, if you're a house flipper, maybe it's, hey, I flip houses just like you see on HGTV. And, I have investors that, work with me in these deals, earning better than average returns. Or you could say, I buy, renovate, and sell houses just like you see on HGTV. So you want to have some way of conveying what it is that you do that will trigger, automatically for people in their minds, that's what you do. So if you're, buying mobile home parks, or you're buying multifamily buildings, or doing real estate development, then you can put that a number of ways. I buy multifamily properties in the Southeast, typically institutional quality, Class A and B, 200 units plus or minus, in really good primary, secondary markets throughout the Southeast United States. And so you can just kind of start the conversation there, and people are going to say, hey, tell me more. Let me know more about that, right? So that's when you can set that follow-up meeting, if it's that 3-touch rule and you're dealing with qualified investors, so that you can set up a follow-up meeting to kind of talk to them a little bit more, get to know them. But generally, you want to have that one-liner, that elevator pitch, that clear, succinct sentence on what it is that you do very quickly, so people know exactly what it is. If you're a capital raiser, which you can do, right? So you can focus on just raising capital, pooling investors into a fund to then fund other people, right? A lot of private lenders and a lot of hard money lenders, that's what they are. They're a fund of funds. A lot of those lenders borrow money to lend. So they'll take equity in their house and lever it up and borrow money to lend. So if you're a fund of funds, you could straight up say, hey, I raise capital to invest in multifamily properties throughout the Southeast with qualified sponsors and operators, or you can say, hey, I raise capital to fund house flippers, people that buy, renovate, and sell houses just like you see on HGTV. And these funds offer better than average returns. So that's the kind of way that you can open up, dialogue with people. You can put that one-liner out there and, open up the conversation with people and explain what it is that you do. And then again, you always want to have all of your packaging dialed in so that you can send them to your website where they can sign up and get more information, and you can continue to build that relationship. You want to make sure that you're documenting your projects and what you do and putting it on your website so people can go there and see the kind of projects you're doing, see the kind of things you're doing. You can have interviews with your investors, and have them kind of talk about what you do and the deals that they've done with you. You can share results. So you have to be real careful, again, and make sure that you're compliant with state and federal laws. But you can certainly share things like, your investors earned better than average returns on this project. You can't talk specifics about the returns and things like that, and you don't want to be soliciting, but you can definitely share the project. Say, yeah, I had private investors on this. They did very well, earned above average returns in this project, secured and insured, backed by the real estate. If it's a syndication, these are very safe institutional quality assets. Multifamily is doing really well right now in regards to the coronavirus and the real estate market. So when it comes to raising private money, those are the types of things that you do. Now, another way to do it, again, we talked about social media, is developing thought leadership, right? You want to have a thought leadership platform to attract capital, to attract investors to you, and share what it is you do, share your expertise. And that can be through a podcast, it can be through a blog, it can be through YouTube, Facebook, LinkedIn, Instagram, all those channels, and using all those channels differently and organically in the way that they want to receive the content, right? Each of those platforms is very different, as well as your website. So you can share your experience, you can share your expertise, You can share your opportunities without soliciting through those mediums and talking about what it is you do, talking about how to be a private lender, talking about the real estate market, especially right now, which leads us into the next, section of the discussion today. So that's raising private capital in a nutshell. You want to be dialed in, packaged, professional, have your program together, your documents, so that you can send that to somebody when they're interested, and you tell them what you offer. Right? Here's what we pay. If it's residential flipping, we pay 8%. Just like a bank. Now, of course, this isn't solicitation; these are private meetings. Now, when the investor says, "Hey, what is it that you're offering?" So, you lend us the money to buy the house, renovate it. We'll give you an 8% return, compounded annually when the property sells. If it's a multifamily deal, you're going to have your your PPM, and you're going to have your operating agreement. It's going to disclose all of your returns and how it works, the fees that you make, the returns that you're offering, whether it's a preferred return and then a percentage of the profits after that with a split, waterfalls, whatever it is you're offering. It's all explained in there, so that they've got that in advance and they know exactly what to expect and what they're going to receive. So, have all that together, dialed in, so it's ready to turn over to somebody as soon as they start asking questions. And that succinctly, this is your program, this is what you're offering, and I'm offering you an opportunity to participate in this. Because that's what they need you, right? So that's what you need to understand. Is investors need you. They're looking for opportunities with qualified operators, qualified sponsors to invest in. I get calls and emails every day from people looking for opportunities to invest in. So there's capital out there looking for deals, even right now, but they're smart. It's smart capital, right? They're looking for the right operators and the right deals that understand and know how to hedge the markets and what's going on right now. So, where are we headed? What are we seeing? So a lot of people are calling for a housing crash and things like that. So right now, nobody knows, right? Nobody knows what the future holds or where we're at. What we do know is the banks are tightening up. They've raised credit score requirements for mortgages. They're lending less on the LTV, so your down payment requirements are going up. We know that a lot of the hard money and private money has changed. They're not lending on some things. They're changing their requirements, lowering the LTV requirements. So before you get into a deal, before you write a contract, make sure you understand where the financing stands right now. Make sure that you have your contract that you can get out of it at any time, depending on that financing, and get your deposit back, because lenders are changing the rules midstream. So if they have not committed to that loan and given you a clear to close, they can change their loan terms at any point during that agreement. So just because they give you a term sheet and an offer doesn't mean that that's the way it's going to stay until you close. And anytime between the time you get a term sheet and a clear to close and start moving to closing, anything can change in that loan. So make sure you can get out of the deal. You can cancel that deal, get your earnest money back at any time during the process. So watch out for that. So keep up with the lending requirements, talk to your lenders, find out what they're doing, what they're seeing, because it's changing weekly. The government's in there. They're buying these mortgage-backed securities. They're buying mortgage bonds, which is providing liquidity to the banks to keep lending. But the banks are, obviously they have their regulations, they have their investors, they have their boards. So, they're going to be careful. They're going to hedge their bets. And right now they're lowering their LTVs and increasing their down payment requirements, because they're anticipating, a potential slowdown or a potential, decrease in values of properties, in the near term. So, we just don't know what the real effects of this are going to be. It all depends on how long this goes and how quickly we can get back to work and get the economy opening again. Just remember where we came from. Okay. So back in, January, February, this whole thing came out. In March, we started to get into the shutdown mode, and it started with no more than 100, gatherings, and, no more, then it went to no more than 50, then it went to no more than 10. So we kind of scaled down in terms of how we shut things down. So it's going to kind of probably scale back up in terms of how we open back up over the next couple of months. And a lot of it's going to depend on, vaccines and, all that kind of stuff. So where we're at right now is you can realistically expect, and this isn't just me, this is the top minds in the economy and in the markets and Wall Street and real estate out there right now. You're looking at 12 to 18 months to get back to probably 75 to 80% of where the economy was before this started. It's not going to snap back, and you can't turn a light switch on and everything's just like it was right before we started. It just isn't going to happen. We're still going to be dealing with this coronavirus for quite some time until everybody basically gets tested and vaccinated, right? That's the only way that we're really going to get rid of it. So there is a potential that we start opening back up and then we have to shut back down again. So just be prepared, be ready, be cautious, be smart. And as you're doing deals, you got to stay in tune with markets, watch the interest rates, watch what the banks are doing, listen to what's going on out there and just kind of be careful and be cautious. So right now, there's still a lot of demand. There's still a lot of markets that are doing really well. There's a lot of buyers out there. Inventory levels are low because a lot of market properties were pulled off the market. So we're still seeing a good, healthy housing market. The home builder sentiment reports came out today, and of course, home builders are very pessimistic right now, lowest levels of all time, obviously because there's a lot of uncertainty, and they're not sure what's going on and what the demand's going to be. But overall, the housing market is still fairly strong. We're not seeing a whole lot of defaults or damage out there right now. We know that the Fed is not going to let the mortgage market collapse like it did back in 2009. So we're not going to have an incident like that unless this thing just goes and people aren't working, and then you can have some serious problems. But there will be, unfortunately, some businesses that can't open. There will be, unfortunately, some people that won't be able to keep their homes and things like that. There are going to be some multifamily properties, mobile home parks, storage facilities where income is going to be down a little bit because people can't pay. Hopefully this is all short term. But again, there's probably a 12 to 18 month lag before things get back to where it was. People's behavior is fundamentally going to be changed from this. People are going to have to build their reserves and their savings back up again once they do get open and get back to work. So there's going to be some contraction in the economy moving forward, more longer term than we're seeing right now. There's been a big disconnect between the stock market and the reality of where we're at. And what you're seeing today is the banks are coming out with their earnings, and they've all lost money everywhere except their trading desks, right? So what has the stock market been doing? It's the banks levering up, hedge funds, investment funds levering up and overinflating the stock market. So that's all, free money out there that the banks have been given to do the trading. And that's why they're all making money at their trading desk, but they're not making any money anywhere else. So, just keep an eye on that. There's still a little bit of, paring down to be done in the stock market before we're back again. There's too much uncertainty in terms of, our real GDP output, unemployment numbers. We've got another unemployment number coming out tomorrow. I don't know where that's going to be. I know there's a lot of people that have not even been able to get through to even apply. So the numbers we've been seeing have been well underrepresented. Could be another 5-6 million tomorrow. I don't know. So we'll see how that goes. But we know earnings seasons are non-existent. Nobody's making any money right now except like Walmart, Amazon, those companies. So the housing market is still good in a lot of areas. Some areas that shut down completely. So just be smart about that. Watch your inventory levels, right? So how many houses on the market? How long have they been on the market? How many are under contract? How long have they been under contract? How many have sold? How long were they on the market? What did they sell for? List price to ask price. That's your residential market. That's how you know what's going on. Track it, watch it daily, weekly, monthly. And then on the commercial side, same thing. Rent comps. What are properties renting for? If it's multifamily, self-storage, what does the comparables look like in the market? What are the vacancy rates? What's the demand in the market? Keep an eye on those things. Obviously, hospitality is really in trouble. I would not go into that market right now unless you got some very deep pockets and you have a long runway ahead of you to be able to restabilize those assets in that business. Very difficult business right now, but there will be some opportunities in the hospitality industry. Restaurants, retail, those types of things are obviously, there's gonna be a lot of shopping centers that aren't going to make it through this. They're going to shut down and go dark. Office, not so sure what the office environment's going to look like. That was already changing and in big trouble, just like real estate before this started. So the reality of everybody staying home now and working from home instead of going to an office, I mean, that's short-lived, right? Most people realize, hey, this is great for a while, but it's very difficult. You have kids running around and all that. You can't permanently work from home, everywhere for everybody, right? There's still that social aspect of business that we all need, that we all thrive in, and we're actually more productive together. That's why these open space and co-working spaces are so popular. So I think you'll get some of that back, but there will be some office buildings that aren't going to make it, that there will be a repositioning going on in that industry as well as retail. Self-storage, we'll see how this does. It all depends on how far it goes. If people get in real trouble, they'll start selling their possessions, but then people will be downsizing, from houses as well and needing to store stuff. So, it just depends. Again, it's a supply demand thing there. As far as, as far as that goes. Industrial is a great space to be in the right areas, right? There's a lot of logistics going on out there. A lot of companies like Amazon needing third-party logistics, needing places to, store and, transition items. So you want to be near inland fleets, near, near the shipyards and places like that, the train tracks and train stations and distribution areas where the cargo is coming in, the terminals, things like that. So if you're in industrial spaces around those areas, or you're somewhere that's transitional where, tractor trailers are getting dropped off and then moving, having logistical office warehouse industrial type spaces around that can be a good play as well. Third party logistics, warehousing for, transportation and things like that can be a good market as well. So anyways, right now, so the bottom line is it's really too early to tell. It's too early to know exactly where we're headed. So you just got to be smart. In general, right now, we're still fairly okay in terms of most markets. Valuations haven't changed a lot in the multifamily commercial space. A lot of those assets are just being pulled off the market. A lot of deals are falling through, but a lot of those sellers have had the properties for a while. They're doing okay, so they don't have to sell right now. There were a lot of skinny deals that have been done the last few years. A lot of very overly aggressive deals that weren't real conservative in their underwriting. So there will be some of those deals, unfortunately, that will be coming around. Unfortunate for some people, fortunate for others. So there are going to be a lot of opportunities out there in the market. So you don't want to be predatory. You want to be a solutions provider, a merchant of necessity, and you want to be there, to take advantage of opportunities to help people and to help transition. So some of those things are going to be in the business sector. Some are going to be in real estate. And you'll be able to take advantage of that by offering a balance sheet. You might be able to come in and just take over some deals in the commercial multifamily space. In residential, it's all about creative financing. Doing owner financing subject to lease options. You want to study those strategies, be ready to offer those solutions, and then have multiple exits on the back end for yourself as well. Commercial, multifamily, those spaces, real estate development. Again, you might be able to walk in, assume some of the loans that are in place, take those assets over just because you have a balance sheet, or you can bring, capital and balance sheets to the table to, take over some of those assets or come in as a partner. Somebody might just need a little liquidity to help them get through this, or they might need a balance sheet to help shore up, their overall operation for the lender, to continue to work with them for the long term. So, if there's any questions, feel free to put them in the chat. I'm almost done here. So those are some of the things you want to look out for and how opportunities are going to be presented in this environment. So it's not always about having cash, but you want to have it available. So the one thing I will tell you, a lot of people say, just go find the deal and the money will be there. You need to find the money first. You need to find the cash buyer first. You need to find what your exit is first before you go find a deal. Because if you find the best deal in the world and you have no network and you don't know where to get the money or who the buyers are, it doesn't really do you any good. So if you're in the residential world or wholesale world, find your buyers first, find your funding first, then go after the deals, right? So make sure that you're packaged up, make sure that you've got that lined up and that you're confident that you can close those transactions, and then get out and start finding the deals. So it's all about being out there, networking, talking to people, and making sure people know who you are, know what it is you do, and are aware of how you can provide service and value to them, right? So seek first to serve others. Seek first to understand where others are and what they need, what their needs are, and then be a merchant of necessity. Provide and fill those needs, right? So where there is demand is where the opportunities are. Where there are problems is where opportunities are created. So at the end of the day, that's what you want to be. You want to be somebody who creates opportunity by solving problems, by being a solution, and by serving others. So I'm going to leave you with that today. Look for how you can serve others first, put yourself in their shoes, understand where they're coming from, and then provide solutions of service and of value to others first. Hope you all have a great day. Stay safe out there, and we will see you on the next one.